Hi everybody, this is Gary dealing with Sentiment Timing, and this is a quick video update that I want to give you guys. I didn't put one out this week because there really wasn't a whole lot to go over, but today's important, so I figured why not get something out and give you an idea as far as what we see going on. So we've been back in June. Woody called for there was going to be a black hole environment that was supposed to start in August, and selling was supposed to pick up after August 15th. So, yes, it took a totally different, path to what we're seeing now, but it's not really. It was never really wrong, and this is something that I want to point out to you guys because we get emails that it's wrong, he was wrong, this and that. If somebody called a low here, all right, and said it's going to be you want to be buying right here, it goes 50 points lower and takes an extra about month on it. And then from there rallies all the way up to where it is right now. Is this person wrong? I mean, you had to endure 50 points to the downside. You had to wait a month, but this was the end result. So why am I going over that? And it's because this is going all the way back. You can see this. This is on July 20th. And I had said that really the way that you want to maneuver through these markets is when it's at the euphoria. Don't listen to the medias. Don't listen to your emails that are coming through and telling you to buy, because they're just in the euphoria chain, and the market always has a hard time when it's in this euphoria phase. And we know it was in the euphoria phase just through the sentiment readings that we saw. We saw a plethora of extreme bullish sentiment readings, and typically it takes a few of them to make the market go down, but this one definitely got extended. But my point is it never really went up. So going back to this time period right now again, this was July 20th. If you would have shorted on that day right here, it would have you would have been getting short at right around 2180. The S&P went 13 points higher. So let's just go take a look at the S&P here, and I'll show you what I'm talking about. So this is the I'm just trying to find out. Okay, so this is the 20th right here in this area here. So you really had to endure 13 points to the upside. Yes, but the people will say, okay, well, the timing was wrong. No, because even when it was here, we were in the euphoria phase. That was it. But the selling was not set to pick up until after August 15th. Now, if we go and we take a look at things, August 15th was the exact high. So it would have been fantastic if the market just fell apart when it did, but the market's going to do what the market's going to do. The only thing we can try and do as traders and investors is put the odds on your side, and there's going to be times that the market's not going to follow things. But it doesn't. Even though we didn't go down right away on the 15th, it never made a higher high, and that's been our stop the whole time after the 15th. And my point is, even from here on the 20th. It was not safe to buy. You had to endure just to make 13 points. You saw a lot of big moves up and down on it, and now you're seeing things fall apart. And that's really what I've been saying, is that there's a lot of people that are going to be caught along this market when we're up here, and it's something I've repeated over and over again. Because we know that everybody was bullish on this market going back, all the way till on Tuesday. Things went, we're getting very, very bullish. So there's a lot of people that are long this market. There's a lot of people that were not expecting this trap door, and that's what last Friday we thought it was, that the trap door opened, but as Woody put in an update, it seems like the hinges were not oiled enough, or maybe there just wasn't enough people on this trapdoor to make it go, because we bounced right back up again. So what's the important part? That we believe the trapdoor started. The important part now is, where is it going to springboard up? And that is something that it's actually more profitable than it when you when you're trading on the downside, because tops are they're a process, and what happens is tops are rounded, bottoms are V's. So knowing when to expect the low, the springboard part of it is going to be very, very it's going to work out fantastic. And there's actually a pattern that I go over with the premium members that has 100%. It's worked 100% at a time for really the last 7 years. So it's a pattern that I'm showing everybody, and it's something that if you don't know when to expect a low date, then you're gonna be buying at the wrong time. And this is something that we put out yesterday, and the stop has always been 21.94, and that was after the 15th. The rejection at 21.86, it's as note so far. And then we're looking for negativity into these dates here. So that's when we're anticipating when the springboard is going to happen. And there's profile things that are supporting that these are going to be the low dates. So if you don't know when those low dates are and when to anticipate the springboard, and not knowing where are we in the sentiment cycle, you're going to get caught buying the drop when it ends something like this. And then what happens is you're going to find yourself 150 points to the downside. What happens when we're down here is everybody gets bearish. So we will know this is the capitulation phase right here. And as I said, there's going to be a lot of people that will be trapped when the market drops. There's going to be everybody that's going to be selling at the exact lows, because that is just the way these cycles work. They repeat over and over. So you have to know when to anticipate these dates, when the low is going to be coming. And then what we do is we just kind of mark it down. So I had been saying that, we're either in this purple phase right here where we're going to drop down hard, or we're in this yellow phase where we're going to drop here. We'll know better once these dates start approaching, because if we're down here and there's still a few days to go, then guess what? We probably still have another 100 points to go, and it's going to be something like this. So we're kind of open-minded with where this ends right now, because we just want to know where, when it's going to find a bottom, and where the springboard is going to have something like this. And we've seen it every time we've had these drops. We've seen massive rallies. So that is pretty much really what we were looking at right here. We knew the wave counts were enough to get at least a 50% drop. Maybe that's still in play. Again, if we end up down at this 2092 come the date that we're looking for a low, then it's 100 points. It wasn't a wrong trade if you got short on the 15th, because you made 100 points on the S&P. Just took a little bit of a different avenue. So you want to keep an eye. We're at some support right now. If the bulls lose this, we're going to have a quick drop down to the 21.25 area, or all the way down to the 21.15. If they lose that, then keep an eye on this gap at the 20.98. Then remember, we have a gap here at 20.37, and then we have this one all the way down at 2,000. And just remember, we are in this very, very bearish pattern right now. So knowing when to expect a low is going to be really, really important. And like I said, in our members video that I just put out today, I show you a pattern that has that's worked 100% of the time for the last 8 years, and it's something that we're going to be looking at as far as for the next trade. So with that, have a great weekend, and I'll talk to you guys next week.